evening, everyone. So today I'm honestly just have some time on my hands, and I felt like just looking at what the current day did. So I haven't really looked at it at all except for this morning. So this is kind of like a blind take, and it might be a little messier than usual. Like it's not going to be very, structured and be like, all right, this is what happened on this time frame. It's just kind of like I'll look at it and comment on it as I look at it. You know, a raw reaction, I guess, of what's going on. So today was a bank holiday for the United States, and I believe somewhere else in the world. So stocks did not trade. The futures still traded though. I think we closed at around lunchtime. Let me just, it doesn't matter. I know it was a banking holiday for the United States, so we're gonna start on the weekly chart. But the previous week was a down close week, so immediately I know, like, from how this price action looks, I'm in the opinion that we're gonna continue trending higher. So we could have a retracement now that we've retraced into a premium. So from high to low of this range, we're far into a premium, and a retracement isn't crazy to expect. Then there's this fair value gap here that we could dip into beneath the previous week low. So going into the week, that's kind of what I'm seeing. Then just on other assets, it's basically about the same thing on the S&P. The Dow is a bit weaker, just normal, following the NASDAQ. Interesting thing though is gold. Gold had a huge week that previous week. And look at the weakness in gold as the NASDAQ trends. So this is very typical. I've seen this many, many times. Every time there's weakness in gold, or there's a down close week, almost all the time, stocks have big weeks. And every time there's small weakness in the stocks, gold has a big week. So the fact that gold made such a huge move here in the previous week kind of tells me that, all right, if there's a time we're going to be doing a retracement and we're going to go back to a discount, it would be soon, because gold is starting to trend. And so that means that people tend to be less risk oriented and more looking towards a safe haven like gold. So that was kind of on my mind. And I look at the dollar and we see it just absolutely getting crushed. Seems like it might go for this low, might be dipping into the rejection block. I know on the daily chart, it doesn't look, looks like there's relatively cool lows here. It could be dipping into, but I mean, like, if the dollar is going to continue trending lower, that would be bearish pressure on the stocks. Only thing is that the dollar is still in a huge discount. Right? It's not like it retraced very high comparatively to the stock market, right? So unless it were to continue falling much, much lower, then I wouldn't really be concerned about what the dollar is, how much lower the dollar is going. If it's just gonna consolidate around here and just continue hanging around here or go higher, then I would be bullish on the stock market, and still bullish on gold too whenever there's weakness. Just not as bullish as if we were to obviously start to trend higher, like much higher, and start making new highs. But anyways, that's all for kind of like the overview. I mean, I guess there's bonds I can also kind of look at, but bonds recently have just been kind of sideways. I know there's a bunch of talk with Trump saying, oh, the bond yields are going down, blah, blah, but I mean, they haven't really moved at all. So since the beginning of the year, really well. I mean, I guess the yields have went down since the beginning of the year, yeah, but I mean, relatively speaking, in the past, since 2023, I mean, they really haven't went anywhere. So I'm not really too concerned about the bonds right now. Alright, now we're on the daily chart for the NASDAQ. So you see how we've retraced into this daily fair value gap. Now from here, we could continue to go higher, right? We have traded above Friday's high. And this daily candle has not closed yet. So I know we're reviewing Monday's price action. But Monday, because there's a bank holiday, the market's closed at 12, which is when the Europe session closed. And so our chart on TradingView is going to basically show this candle as just Tuesday and include the price action we had on Monday into Tuesday. So we don't really know where this is going to close, but it's possible we continue trending higher and we close above this candle. And if we do that, then I'd expect to run back up to these highs. And you know, it would prove that this level would hold price. And if this is the case, where we don't even make it to a quarter way through this entire gap, then I'd be very bullish, and I'd expect price just continue running through these highs like that. All right, but let's go down to the hourly chart. Now, I'm gonna make this invisible here. Now, one thing you see here is we had 1800 opened up, and a little bit of volatility from Asia, and then we had 2 a.m., which is the Europe Open. I think that I believe it's for Frankfurt in Germany. And at 3 a.m. we have I think it's London Open at 3 a.m. And yeah, and then we have the New York Open. Well, it didn't actually open. So you see how most of the volatility was introduced in Asia and Europe, and then it just kind of died down. The London close, when London is closing, kind of created a bit of volatility. But you'll also typically see 9 o'clock make the high of the day. So it actually did, you know, act as if there wasn't a bank holiday, which was interesting. But that doesn't always happen. So this is why I wanted to review this day, because even though it was a bank holiday, my model was still there, and price moved as if it was a normal day, almost, with just less volatility. All right. But it doesn't always happen like this, and it'd be nice to catch a time where it just absolutely makes no sense, and it catches you like, you know, catches you lacking when you're trying to trade it. So anyways, my model, I go from low to the high of the day. We're above 50%, so I'm only looking to sell. We're on the 15-minute chart, but I look for the first 5-minute short-term high, and then I take the first 1 minute fair value gap in the opposite direction. Okay. But once we place in this high of the day, notice how we've done so after trading above the previous day high at the proper time. So when you're looking at where liquidity is, like previous day highs and lows, or spaced old highs and lows, whatever it is, right? Fair value gaps, you know, PD arrays, any of them. The most important thing is the context, right? Yeah, we traded above buy side liquidity, but sometimes price is just gonna, not all the time, but price is just gonna wait around until the right time. And 9:30, as you can see, pretend like as if the markets had opened, made a run higher. And I mean, some people, some banks in the world are probably still operating as if, you know, there was a 9:30 open. Because you can still participate in these markets, even though if it's a U.S. bank holiday, until the London market closes. So anyone trading in London market that usually does the trading at 9:30 New York Open is probably still trading at this time, and that's why there's, you know, it appears as if the market had opened up. But if you go into like a stock like Nvidia, like you're not going to see any trading for today. You see Friday close and nothing today, right? So the none of the American markets opened up. But this is the NASDAQ, which is this, you know, represents the stock market in the United States. It's just because the futures is traded globally. And yeah, but anyways, as the volatility came in, price immediately made a very aggressive and quick run higher. And whenever you see this, this is usually start a reversal. Reversals always are preceded with, you know, aggressive runs in the opposite direction. So this kind of gets people into positions, this gets people excited, gets people thinking we're going to go higher. Huge trend, right? And then after the 5-minute short-term high is taken out, you just wait for a 1 minute fair value gap, a breaker structure. So we end up, so I have two things. If we have fair value gaps in a range, then I need all of them to be inverse before trading, which means I would need to wait this one to be inverse. Or we can create some short-term lows like this, and then we just break the structure. So we kind of market shifted here, okay? Or I could use this short-term low. That's a nice market shift. We closed below. We retraced into this fair value gap, which would have been an institutional or full entry drill. There you go. And this is what I mean. If I were to put my stop at the high, right? See how it's like most of my stops are minimum 20 points. Sometimes I have to go up to 40 points. This is huge. This is so far away from the highs. Right? Usually, when I do 40 points, you know, it's close. It's not even at the high. It's close to it. It's underneath it. So you can see there's obviously much less volume, much less volatility in the market, right? So you have to be, and even to take profits, most of my take profits, I have to go for at least minimum 3 RR, right? But most of my take profits are around 80 points, 60 points. I'd been holding for the entire day's range. I don't even get 80 points. And usually I take a piece of the day's range to get 80 points. So there's obviously a lot less volume. But let's just say I would have traded. I would have obviously used a smaller stop because I just don't need to have a bigger stop. Let's just say I went for that high there. And I went for this low. This is still about 4 times what I'm risking. It's pretty good. And it doesn't have any drawdown at all. Not really. So, unless you consider commissions drawdown. But, so, I mean, you know, it does get a little ugly. You know, when it kind of just goes up and down, up and down. It's obviously really tiring. Not really what you'd want to see as a trader. But, you know, it doesn't eventually run out the sell side. And, yeah. So, I mean, I just noticed that. How basically my model was there, but it is a bank holiday. And so I did not trade it. But, you know, again, there are some bank holidays that look way worse than this. So just because this bank holiday showed something that made sense doesn't always mean that it's a good idea to trade them. You know, very simply, there's less opportunity. Because there's less volatility, less participants. And so even if there is a trade that you can find algorithmically, like a reason to get into a trade, it's not always the best environment to do so because you're just not going to see much movement and you're going to have to use either more leverage to make the same amount of money or just be a lot more patient and hold for a bigger range. And in either case, you're probably going to have to be more patient because price isn't going to move as fast. So it's going to take longer to get to your take profit. Anyways, that was about it. I am hoping to probably stream. It really depends how the market looks. Or I'll just record my session tomorrow morning. But I am going to be planning on trading. Either way, I'll try and upload tomorrow because there is. I actually didn't know that there was high impact news. Yeah, I forgot about FOMC minutes. It's gonna suck. I can't trade Wednesday, but I can trade Thursday. Wait, I did not know there was this much news. I thought there was only news on Friday. I swear I checked Forex Factory and it showed like no news. That's crazy. I ain't ever looking at Forex Factory ever again. This thing just lied to me. Yeah, look. Look at this. It doesn't consider durable goods as interesting. But yeah, anyways, obviously most of the trading is going to be done towards the end of the week. So, you know, tomorrow might not be the best day to trade, which is why I do want to make a video or I do want to stream. Because honestly, I mean, this is a pretty insane forecast, so there might actually be some volatility. But yeah, I don't know. It's possible. It will be the first day of the week. It's just I get kind of uncertain about the day after holidays, just because simply ICT has warned about that day in the past. He said, "Oh, don't trade the day after a holiday or the day before a holiday." And I mean, I've looked at every single day before and after a holiday, and honestly, sometimes it's amazing, sometimes it's not. But if I'm going for high RR, like 3 or 4. I know it's worth it to, you know, suffer the few times you'll lose on those types of days. So I will be trading tomorrow, which will be interesting to see price action and the markets open up. And anyways, I hope to see some people there if I stream. If not, then well, it's all no worries. Yeah. Thank you very much and have a good night. Good luck tomorrow.